Good morning, everyone. I hope we have all the participants who are ready to join the session today. And a very good morning to all the respected participants. I, Abhijit Ghosh, along with my colleague Ms. Sakshi Narayan from IIMT College of Management, welcome you all again in this morning session of the FDP. We are conducting this FDP in collaboration with the Indian Economic Association. Today we have a very special guest among us, a professor of practice in truth and we are honored to have with us Dr. Dayadhar Raj Srivastava, PhD in finance from Amity University, Lucknow. He is a retired senior banking professional from SBI and accumulated experience of about 44 years in banking industry and academic. At present, Dr. Srivastava is a professor of finance at Bombay Stock Exchange Institute, New Delhi. He is also a visiting faculty at Manav Rachna University, Faridabad, GLA University, Mathura, and Tirthankar Mahavir University, Moradabad. He is a certified financial planner, FPSB. He is an AMFI certified Association of Mutual Funds in India, and he is also a certified associate of Indian Institute of Bankers. He is also a SEBI Smart trainer. Today, Sir will cover the topic financial forecasting and decision making in entrepreneurship. Again, it is my pleasure to welcome you all in this morning session of our faculty development program. And especially, we are privileged to have Sir's expertise and vision guiding us toward academic excellence. We welcome you, Sir, again. And now we would like to hand over the session to you. Dr. Srivastava, please, Sir, you can start the session.
Thank you, Mr. Abhijit.
Thank you.
I'm really grateful to IIMT group of colleges for giving me an opportunity to interact with your esteemed faculties. Today, I'll be covering this topic of financial forecasting and decision making in entrepreneurship. This financial forecasting is a very important aspect. Either it is a startup or it is a well-established world-class company. And we will see during the course of our discussion that how some startups develop themselves into big companies by using this financial forecasting through different methods. And there are also, on the other side, there are also certain cases where due to lack of proper financial forecasting, some world-class companies failed. We will be discussing more with their brief examples because we will not be covering the entire thing detail, keeping in view the paucity of time. So now we will be first talking what is the importance of financial planning, of financial forecasting in entrepreneurship. Now, it is very, as I said, it is very, very crucial for all the companies, either big or small or medium-sized companies, to have it because it helps them in business planning to provide a roadmap for their future growth. It also assists in setting realistic goals and objectives because if you don't set realistic goals, then you are bound to fail because you are not able to assess the market trend. It also improves, as I said, it improves in cash flow management, also identified some potential risk, financial risk and uncertainties, and for scaling up their operations and also HR related issues. And then decision making is also very important in entrepreneurship for strategic planning to setting up their long-term business goals, giving a proper direction to the company and their employees, and also proper resource allocation in the area of finances, manpower planning, and time management. And for a startup or even for a well-developed company, what is more important? Innovation and growth. Because without innovation, no company can grow. We'll be seeing during the course of discussion that how Zomato or Nykaa or even Reliance Group, how they expanded by doing these innovative processes. And then we can talk about what is the objective of why we do financial forecasting. Number one, to estimate our future sales and revenue growth. Then also to control our costs and operating expenses so that we can have a proper planning and budgeting in the process, and also to monitor cash inflow and cash outflow, because in companies this is very important, from where cash is coming and what is the cash outflow. Because when some companies after startup they go for IPO, so IPO they go for valuation of the company. So when you are doing valuation of the company, say some investment banker, you engage some investment banker for valuation. So they deploy different methods, and one of the most important methods is discounted cash flow method. So what is the present value of future cash flows? That is very important in our financial forecasting, that we say cash flow planning. Based on that present value of your future cash flows, the investment bankers fix the pricing of your IPO. And then one more important point in this area is that short-term versus long-term forecasting. Short-term forecasting, it is basically for a period of up to 1 year for companies to manage their working capital management, expenses, inventory management, day-to-day operations. And long-term may be ranging from more than 1 year, say up to 5 years, or even more, uh, say for focusing on their strategic goals, investments, and business expansion, also taking long-term financial decisions based on capital expenditure and funding requirements for a new market entry. As we are saying, we are looking into our present atmosphere, like Zomato, they are entering, or even our Chai Point, that they started from a very small uh, outlet, and now they have expanded, they have entered into new markets, either online or even offline. Hmm. So this is important. This is the importance of financial forecasting. It is, if we say in a very simple words, financial forecasting for a company is like, if some student goes for examination, he prepares well for the examination. He or she doesn't know what type of question will come, but they are thoroughly prepared that any type of question comes, they are ready to reply, they are ready to face it. Same thing happens in the case of companies, that if they have planned, because one cannot be an astrologer that they can exactly plan it, but they can simply forecast it, they can predict it, that what is the future of the company, what is the future of their product, what type of product the customers demand. So this is the basis of our financial forecasting process, or financial forecasting model. And you are well aware that financial forecasting, we can divide into two main categories: qualitative forecasting and as well as quantitative forecasting. You all aware of Delphi methods, market research, and scenario analysis are in quantitative, time series, regression, or moving averages. Even when we talk of stock market or equity market, we talk of technical analysis, where in addition to moving averages, we also use oscillators or candlestick patterns to predict the future movement of the markets. Say, for example, if we want to forecast the future of electric vehicles, what will be the future of electric vehicles by the year 2035 in our country? Say in over next 10 years or period of over next 15 years. So what is the basis of it? You can gather some information, you will summarize the data, and you will see what are the plus points and what are the negative points. Say, what is the best scenario that people are going for electric vehicles, or worst scenario, there is a shortage of batteries. People have more inclination towards petrol and diesel vehicles as compared to electric vehicles. So all this depend upon your financial forecasting process. Now we can see how time series can be used in our financial forecasting process. I will not be going into detail of every, because I will be discussing several case studies of successful case studies, as well as also some failed cases, world-known failed cases where due to lack of proper financial forecasting, companies failed miserably. So time series analysis, you are well aware, it is a quantitative forecasting technique that is used to analyze historical data points collected over a period of time to identify patterns, trends, and seasonal variations. And it helps us in predicting future value based on past data. So the major important component of time series are number one, trend, as I said, that is long-term upward trend or downward movement in data. Say, for example, a steady increase in smartphone sales in smartphones over a period of time, say 4 years to 5 years. Then another aspect is seasonality pattern, that repeating patterns that occur at regular intervals. Very simple example is that ice cream sales goes up in summers and as compared to in winter. And then there are some cyclical patterns, that is economic cycles, fluctuations over a longer period of time. Say housing market booms and crashes. Of course, in India there is no such case of crash because our regulators are very strict. RBI, SEBI, are all other regulators. But in foreign developed countries, we have seen these cyclical patterns, like this in 2007 subprime lending crisis, where some big companies like Lehman Brothers, one of the biggest investment banker in the world, and those times it failed overnight in 2008. Then there are certain irregular variations which is not in the control of human being. Say, for example, there are certain external factors, economic crisis, like it happened in the case of COVID-19 pandemic. So if we, as I said, I will be more elaborating my point based on case studies. So the most important, gold we call it treasure. It is our traditionally for last so many hundreds or thousands of years, gold has been the most important saving or investment point for Indian household. Now, if we use time series analysis, how we can use it to forecast gold prices in our country? So for that, I have taken I've taken a very small, short period of span of time, say over the past 6 months, monthly average price, gold price per 1 gram of uh, per 1 gram. And here, what we will do? Number one, we have seen this historical data we have collected. Now we will identify the patterns that whether gold prices are showing an increasing pattern or they are showing a declining pattern. And seasonality aspect, as I said, second aspect is seasonality, that whether they go up during certain seasons, say festive seasons or during wedding times, and irregular variation due to some economic policies and even global market trends. Because now we are operating in an international market, we are impacted by whatsoever happening in other countries. Some war is coming out, it is going out in some other country between two countries, or some trade policies, or even change of regime in some other country. It also affects other neighboring countries, and not only neighboring countries, the entire world. Say changes in tariff rules. One country changes its tariff rules, and the world market is impacted through it. So in this case, as I said, I have kept a very small example using time series method. We are using 3-month moving average. Of course, 3-month moving average is a very small period of time. Normally, we take 50 days or 200 days moving averages. But since I'm just elaborating by an example, I repeat, if you want more detailed study, you can give your queries to Mr. Abhijit sir or Sakshi ma'am, and they will forward it to me, and I will send you more detailed studies. But here, just to elaborate my point, I'm just using a small period, this 3-month moving averages. So based on this data, we have predicted the gold price in July, because we have seen gold price from January to June, and now here we are predicting the gold prices in July based on this moving average method. It is here 5583 per gram. So how we can use it? What is the basic? Now we have got this data. How to use it? If prices are expected to rise, jewelers They can stock up early to save costs. They anticipate based on the financial forecasting through this time series, the moving averages, that prices are going up in future. So they can stock up early to save the costs. Even investors, they can decide whether to buy or sell gold based on trends. Because gold, there are so many ways to invest in gold. The traditional way is to invest in jewelry, but it has its own cost. Then there are sovereign gold bonds, then gold ETF, where 1 unit is equivalent to 1 gram of gold. So investors can decide about when to exit or when to purchase gold based on these trends. And important aspect for general consumers, they can plan uh, during the wedding season that when to buy the gold so that they can save on price depending upon this. So we can say that this time series analysis helps Indian investors, businesses, and consumers to make informed decisions based on gold buying. We have just limited ourselves to case of gold, but it can be applicable to any type of commodity. Then we are using historical data to identify trends and seasonal patterns for price forecasting. And this method is widely used in our stock market analysis, moving averages, or time series, or even if I said technical analysis as a whole, which is a very wide subject. Technical analysis is a very wide subject in itself. And where moving average is just one small part of it. You can say it's just a tip of the iceberg. And there are other ways also, I told you, oscillators, or there's some charts, chart patterns, or even candle and stick pattern. But here we are just limiting ourselves to financial forecasting based upon this time series. Then another aspect is regression analysis. We also use regression analysis in forecasting. We're well aware it is a quantitative forecasting method to examine the relationship between one or more independent variables that we call predictors and a dependent variable that is the outcome. So it helps business in predicting the future trends based on historical data. And we can take one example of how to predict FMCG sales based on monsoon rainfall. Because FMCG sector, which includes products like food, beverages, and personal care items, it is highly dependent on monsoon rainfall. Because a large portion of our Indian economy and our population relies on agriculture. Rural demand for FMCG products is influenced by good or bad monsoon seasons. So I have here given you one particular example of monsoon rainfall, and depending upon the monsoon rainfall in millimeter, we have taken as X, and FMCG sales in crore CR, which we taken as Y. It is in front of you. And if you perform regression analysis based upon this data, I again remind you that I have taken very small data point just to put forth my point. And if you want detailed, you can raise your queries to Abhijit sir or Sakshi ma'am, and they will forward it to me in case you are interested, and I can send you the detailed this studies to you. So this, based upon this regression analysis, we have found out, working out, we have found that every 1 millimeter increase in rainfall based upon our data, FMCG sales increased by 2.5 CRs. So what we have predicted through this regression model, that if 900 mm of rainfall occurs, then FMCG sales will go up by will be around 2,750 CRs. So what business decision you will take based upon this regression analysis? That if monsoon is strong, now it is applicable to all those companies who are operating in FMCG product area. That if monsoon is strong, and based in our study, what we have taken, what is the meaning of strong? If it is more than 900 mm, the company can increase rural supply and production. Because every company has to increase their profit, so they have to provide more supply, because there will be more demand of these products in rural area. And if monsoon is weak, say below 800 mm, then they may focus more on urban markets. Accordingly, the company can adjust their marketing budgets, stock levels, and distribution strategies also accordingly. And you just keep in mind that what we are just doing financial forecasting using regression analysis model. Why? What is financial forecasting? In very simple language, we can say, हमें मुनाफा चाहिए. How we can get munafa? How we can get profit? Because every businessman has only one target. What is say if I use the Hindi word munafa? Profit chahiye. Through legal means, of course, through legal means within the guidelines of our regulators, within the law of the land, not beyond that. So through legal means to increase the profit. And for that, how to increase the profit? More earnings, lesser expenses. That is proper budgeting and keeping an adequate stock level, neither more nor less. And how our distribution agencies will function. The distribution network is also a very important point in financial forecasting. That if our distributors, they are competitors, we should not forget that we are not operating in isolation. We are operating in a competitive world where we have got competitors also. They have got their own strategies and they've got same set of distributors sometimes. So we have to keep happy our distribution network also. So that is why this you can say this decision based on regression analysis can be important because companies can optimize production, distribution based upon this forecast. And this approach is widely used in agriculture, FMCG, retail, and even in financial planning process in our country. Now we have already discussed this moving averages. And as I said, moving averages is more prominent in forecasting stock prices. So we can take one more example, how this forecasting of stock prices affects, say, for example, we have taken the example of Reliance Industries. Investors in Indian stock market, either on NSE or BSE, they use moving averages to analyze stock price trends. As I said, normally they take 50 days or 200 days moving average, but here I have taken a simple example of 5-day moving average. And based upon that, we have predicted the stock price for next trading session. It is in front of you. It is just an example. And based upon this, if the current stock price is below this level of 2528, traders and investors can buy, they go for buy expecting a rise. And if it is above it, they can go for sell, booking a profit. And as I repeat again, that long-term investors for trend analysis, they use 50 days or 200 days moving average. And it is mostly used by investors, traders, analysts, business research analysts, investment bankers for stock trend analysis in our country. Even banks and financial analysts, they find it very useful to predict future interest rate movements. And then e-commerce and retail businesses, they also use it, like Amazon India, they also use it for demand forecasting. This we have already discussed, that it is mostly used by, it helps Indian stock traders, businesses, and economists to make data-driven decisions. Data-driven, based on historical data. Now, as we were repeatedly using historical data and trend analysis and scenario planning, and what are there are certain limitations also, certain limitations of financial forecasting. But this trend analysis, as I said, we identify the patterns, then see the comparative performances and forecasting future trends. Then scenario analysis, you are well aware, we are evaluate different possible future situations, to prepare for risk and opportunities. For example, as I said previously also, that any startup going for launching an electric vehicle or electric scooter, best case, what is the best case scenario for them? That government subsidies may increase. So if subsidies increase, demand will rise. Worst case is a shortage of battery supply. So what will happen? Production delays, and most likely situation that demand will grow gradually over time. So we have taken a brief case study on Tata Motors electric vehicle market expansion, that they analyzed past vehicle sales data to track growing demand for electric vehicles. They observed that in 2018, only 2,000 electric vehicles were sold. By 2023, this sales increased by to 50,000 units per year, with a compounded annual growth rate, CAGR, of approximately 60%. Using this trend analysis, Tata Motors can forecast that electric vehicle sales will cross 1 lakh units per year by 2025. And based upon this forecast, based upon this trend analysis and their forecast, they invested heavily in EV production, electric vehicle production plants, and battery technology. Because I said for electric vehicles, battery technology is also a very important part. But there are certain limitations of financial forecasting, as I was talking about. Say, global supply chain disrupts. We have done forecasting very carefully, but there are certain challenges. The limitations, I can say they are challenges. The better word is challenges. Because limitations, I means we cannot go beyond that. But challenges means we can overcome the challenge. We have again forecast to how to face the challenge in future. So number one challenge is global supply chain disruptions. Some chip shortages which can affect vehicle production. Then policy changes if subsidies are reduced. Electric vehicle demand may drop. Say our regulators, they are giving boost by encouraging people to take loan. Of course, car loan is there, but our regulators had planned that on electric vehicle, if you take a loan, interest up to 1.5 lakh is tax exempt as per our income tax act. So these are some positive points. They can say government policy changes. Then consumer behavior, and the challenge is consumer behavior, which is very much unpredictable. Some buyers still prefer petrol and diesel cars because we have seen it. Because in change management, it is very difficult to change. We just like to remain in that situation where we were, because we have seen that situation. What is in future? That is again forecasting. Companies can forecast. Individuals, difficult for forecast. It does not mean they don't have knowledge. It is only individuals who forecast for the companies. But it is when it comes to our own case, individual, our own case study, our own case, we have some inhibitions. I can't say limitations. We have some inhibitions. So we can say consumer behavior is unpredictable. We prefer petrol or diesel cars because of some charging infrastructure. What is the infrastructure for charging these? The first question comes in. So that is consumer behavior. And one important point is competition in the market. As I said, that we are not operating in isolation. We are not operating in absolute world, like Einstein's theory of relativity, that everything is relative to something else. If you are in absolute world, we will say, okay, I am alone. But it is not the case. So they are competitors. Who are competitors in electric vehicle for Tata Motors? Tesla, Hyundai, to name a few. International companies are entering our country, India, so that it can affect Tata Motors' market share. So this financial forecasting, it may not have taken into account those factors, but it has to be included in that by doing another proper forecasting. So these are the certain limitations which I can't say that these are really limitations, but as I said, these are challenges in front of any startup, in front of any entrepreneur, to how to withstand the competition. So they have to forecast accordingly, predict accordingly how to withstand the competition. Because even competitors can be competition can also be forecasted. Another we can take example of financial forecasting in entrepreneurship. Live example, Zomato. They use financial forecasting for growth and IPO as well. It was founded in year 2008, and today it is one of India's biggest food tech startup. They use this process to scale up their operations, to attract investors, and they successfully launched their IPO in the year 2021. So what were the aspects for them? They needed to project revenue growth to attract funding and also expand operations across the country. They predicted consumer acquisition costs and marketing expenses. They also analyzed past order volumes and restaurant partnerships to estimate future revenue. And what was the result? As a result, they justified their valuation. As I said, for launching an IPO, valuation is very important aspect. And so they justified to the investment bankers about their valuation and raised investor confidence. Because valuation is very important factor for raising investor confidence also. As I said, we are not working, any company is not working in isolation. Competition is there also there. But there are also spectators, are users. I can't say spectators, they are users, consumers, investors' confidence also, and consumers' confidence also. So how they used financial forecasting process, as I said earlier also, they analyzed their cash reserves, operating expenses to plan investments. They predicted break-even points in various cities, in tier 2 and tier 3 small cities also. That what is the break-even point for them. And then logistic cost. They also estimated their logistic cost, like delivery, what will be the salary of delivery persons, fuel cost, app maintenance. Hmm. And if I say they estimated about around 2000 CR for expansion into tier 2 and tier 3 cities, then 1500 CR to improve delivery speed and club kitchens, because delivery speed is also very important from the angle of customers and also for the successful of for a company. And what was the result? Using this financial forecasting process, they were able to secure about $1.3 billion IPO, that is approximately 9,300 crores through their IPO 4 years back. So as I said, what was important for Zomato? They operate in a cash intensive business and needed to forecast their cash flows. And what type of cash flows? Daily cash flows from customer payments and restaurant commissions. Then for them, the industry in which they are operating, they also needed seasonal demand spikes, like for festive seasons, even IPL, World Cup, cricket seasons. Of course, there's a seasonal demand to scale up operations and also to plan cash reserves to handle some unforeseen situations where the business may not pick up properly. And what is the result today? Zomato maintained enough liquidity to survive losses. And they also secure about 1,800 crores of funding from investors like SoftBank and Tiger Global. How was it possible for a small company that started in year 2008? Only because of forecasting, financial forecasting. They used it to scale up their business, manage their investments, and cash flow stability. What is more important? Cash flow stability. And today we can say that it is one of the top food tech companies with about 75 crore plus market valuations. Then balance sheet, as I said, what was the expansion in tier 1, tier 2 cities? This I can show you. These are their key investments based on financial forecasting, expansion to new cities, cloud kitchens and logistics, acquiring startups like Blinkit, Uber Eats, marketing and brand building, AI and technology for faster deliveries. See, they have taken care of all these things based upon their forecasting process. Then now we can talk about that this role of financial statements, not because what we are discussing about financial forecasting for the success of a startup or for the success of a company. So financial statements have also a big role to play in uh, this financial forecasting process. You are well aware what are the important financial parameters. So we can use the case of this like income statement or revenue forecasting, expense forecasting. So we can talk of this Reliance industry expansion into renewable energy. Reliance Industries, it is one of the India's largest conglomerates. Now it is expanding into renewable energy, investing heavily in solar power and green hydrogen to ensure financial stability and strategic growth. They use financial statements for financial forecasting. And how they use this financial statement, say income statement. They've got some existing business in oil and telecom. They predict revenues from new energy division using market demand trends, again trend analysis, estimating future operational expenses for solar and hydrogen production. And what they forecasted to expect about 75,000 crores in revenue from the renewable energy sector by the year 2030, that is say 5 or 6 years from now. And how it is based upon global demand and government incentive. Again, this forecasting is based on global demand and government incentive. As I discussed earlier, that these are also challenges. If global demand falls, what will happen? But it is just a forecast. And government incentives. So government policies. That is why, no, say they have plans around 75,000 crore of investment in capital investment for renewable energy projects. They issue green bonds and raise capital from investors to fund new energy projects. That is what they are doing for based upon their financial forecasting process. So what we can conclude that these financial statements are also very important tool for financial forecasting. And we will see it, we will discuss ahead that because of this failure, improper financial forecasting, some world-class companies failed. Some leading, like in aviation industry, we have got a live example of Jet Airways. Because why they failed? all things which come in newspaper, that is different story. But what was the crux of their failure? Improper financial forecasting. So by using this forecasting process, Reliance is investing in India's sustainable energy for future. Then one more case we can talk of financial forecasting. Startup journey to profitability, Nykaa. It was founded in the year 2012, which is a leading Indian beauty and cosmetics e-commerce platform nowadays. And as a startup, they solely relied on financial statements for financial forecasting to manage their cash flows, secure funding, and manage their scale of operations. They needed to forecast sales revenue to attract investors and plan growth. They analyze the past sales trends to predict future revenue growth. They used customer acquisition cost and product pricing to estimate future profits. They projected future marketing expenses also for collaborations and online campaigns. And the year 2015, it is just after 2-3 years of the launch of their startup, they projected 100% revenue growth per year due to India's rising demand for online beauty products. And their actual growth, which was in 2015, it was 200 crores of revenue. It swelled up to 1,860 crores of revenue 5 years later, that in the year 2020. And in 2021, because of this proper financial forecasting, what was the outcome? By 2021, Nykaa became a profitable unicorn before its IPO listing. That is a successful case study. They also needed funding to expand their warehouses, marketing, and offline stores. So how they used it? How they used the balance sheet? Assess their current assets, inventory and cash, and liabilities, loans and expenses. And one important point to note that they operate e-commerce plus offline stores. Managing cash flow is very important part in this. And again, seasonal spikes in demand, festive season. So, and they ensure that they had enough cash, which is a very important point. They also ensure that they had enough cash reserve to pay their suppliers to avoid any liquidity issue. And what was the result? In 2021, they raised about around 5,300 crores through their IPO. And as a result, it became a billion-dollar company. So we can say this is an example, a live example from becoming from a startup to a market leader. How did it happen? Because of accurate forecasting to help their startup to secure investor funding and grow into a billion-dollar brand. And we can say that today Nykaa is India's leading e-commerce platform, e-commerce platform with offline stores in many cities, including tier 2 and tier 3 countries. And they had done investments based on their forecasting process, expansion into tier 2 smaller cities, then private label brand developments, offline retail store expansion, they invested amount in AI technology, marketing and influencer collaborations. All this they made investments based upon their forecasting process. And not only this, forecasting also ensures, as I said in the beginning, risk management. Nykaa had to prepare for market risk, such as competition from Amazon, Flipkart, and new B2B startups. This they had to plan it in advance. So they identified several risks like competition from Amazon, Flipkart, what will be the impact on their business, reduce market share. So what was the solution they found based upon on forecasting? They focused on beauty exclusive branding. High intensive cost was a risk factor. Impact cash flow. They used AI driven demand forecasting. Because they operated prior to they start operation prior to COVID-19, the offline store sales dropped. So they shifted to e-commerce and skincare sales. And customer acquisition cost, high expenses in early years. So they launched loyalty programs and influencer marketing. And what was the result? Now they have achieved a strong market position, dominating India's beauty e-commerce sector. It is a well-known fact now. And I said, when their IPO was launched, on the first day, it was 79% gain. It was launched at around, I exactly do not remember, but on the first day gain was approximately 79% of their issue price. Again, what we conclude that financial forecasting, this is there. What is the impact of financial forecasting? It helps Indian startups like Nykaa to manage revenues, investments, and risks efficiently. And accurate forecasting that help the startups to secure investor funding and grow into a billion-dollar brand. By 2021, it was India's first profitable beauty tech unicorn that we have already discussed. Then one more point that we can discuss, Chai Point. It was a small tea startup and it's a developed into 400 crore brand background. Chai Point, it was started in the year, founded in year 2010 as a small tea cafe in Bengaluru. The idea, what was the idea? To provide high quality tea for working professionals. We all know everyone is very much fond of tea. I cannot use the word addicted, but everyone is very much fond of tea. It has become our culture to have a tea, or when you meet somebody, you offer a cup of tea. So the same idea they devolved upon to provide high quality tea. And over a time, this company grew into a chain of tea outlets and vending solutions. How? Finding financial forecasting. They predicted revenue. They also studied tea demand. What is the demand of tea? What is the trends? They planned investment in their outlets, vending machines, as well as supply chain. And they raised funding and ensured business sustainability. And what were the key investments? Again, new tea cafes and outlets, vending machines, as I said, and of course, AI and IoT technology for automation. One more challenge that they were facing was that, uh, from local tea vendors, how to overcome that challenge, because it is a big challenge. Then also to come to the break-even points for the new tea outlets in metro cities like Mumbai, Delhi, Chennai, Kolkata, anywhere. And they also predicted return on investments from the digital orders and mobile sales app, sale of their mobile apps. And they also identified some key risk areas for them. What were the key risk areas? Yeah. These are the key risk areas. Competition from local chai walas, very price sensitive. They're offering tea at lower price. So they launched. They are chai on the go cups. High rent cost. It was reducing their profit margin because in treasury management we talk of zero based busting. What is zero based busting? Suppose there's a tea point, say chai point, and their cost is very high. So they are not able to meet their break-even point. What they will do? There's another uh, uh, outlet, Crossword. They are in book sector, magazine, books, area of books selling. So if they tie up with the Crosswords, that you install a small shelf in our uh, space, in our outlet in Chai Point. So what will happen? People, those who come for tea, they will also see the books there, read the books. Even if they do not buy, they read the books, they will stay there for longer. So what will be the result? They will ask for a tea, cup of tea. So footfall will increase. And this is more prominent in the area where? In corporate office locations or in near uh, educational institutions. Because here, this high rent cost can be compensated because we can increase profit margin because we had just tied up. We have not, one way was what? To meet the high rent cost, reduce the quantity of tea in the cup. That is not good for customers. Raise the price. Again, there are competitors in the market. So what is that? It is not cost cutting. It is just zero based busting. I have invited some other company which is not our competitor. It is just a supporting. So their crossword business is also going up. People are coming and buying it. And this chai point, they've got double advantage. One, they have utilized their unoccupied space. They are charging rent from crossword. And then there are more footfalls. People come, sit, take the book, read it. If buy it, okay. But they will, if they're sitting for a longer period of time, they will also have a sip of tea. So that is how you can, that is financial forecasting. So I can say that zero-based busting is also very important tool in the area of financial forecasting. Then online deliveries. Nowadays, it is very common. Prior to COVID-19, we were not aware of what is digital banking, what is this online food delivery. We were more relying upon cash. Nowadays, you see, even our if people from economically weaker section of society, they are freely using these are mobile apps, Paytm, Google Pay. Everyone is fully aware. This QR code, uh, uh, QR, every readily available with them. What was the how pandemic impact? So as I say, every negative thing has got some drastic impacts also and some positives also. Drastic impact of COVID-19 was very much drastic. Many people lost their lives. But what was the positive impact? Digitization of banking, online deliveries. Now we have started a new platform, online platform, e-commerce, and then seasonal demand variations. They introduced loyalty discounts for sales fluctuations and subscription model also. So what is the outcome? They forecasted risk, as we have discussed, all these risks. They These were, of course, there were risk factors for them. Competition, high rent cost, some natural pandemic impact, or seasonal demand variation. So they forecasted this risk and diversified their revenue sources. How? Why diversified? Because of forecasting process. And they diversified into retail stores, corporate vending machines, online sales, tie-ups, And what is the impact? Business remained profitable despite some negative aspects. Then by 2022, it became this Chai Point became India's one of the top premium tea chain, and they started planning for their IPO. And now they are expanding further into FMCG, that is bottled tea and ready to drink chai products. That is say about 15 to 20 years back, this was unthinkable. Bottled means we were just thinking of Pepsi, Thumbs Up, etc. Now, ready to drink chai products they are also coming into this business. And how it is possible? Because of financial forecasting the future. As I said, they converted their limitations into challenges and overcame those challenges to become a successful startup, now big business house. How it was possible? Through financial forecasting process. So, and what is more important? Accurate financial forecasting, proper financial forecasting. हम फोरकास्टिंग ऐसे नहीं कर सकते कि शुतुरमुर्ग की तरह हम अपनी गर्दन को जमीन में रख करके हम देखें कि now everything is okay. That is not financial forecasting, and it has happened in some cases that we will see. Because I was a banker, I had seen some cases. People were not able to recognize the change that was coming in future. That is why all these things failed. When I was in bank, I was dealing with the carpet exports, woolen carpet exports. Those days in early 2000, in late 90s, early 2000, they were doing very good, very successfully. Belgium, Germany, they were there. They were exporting to these countries, and in European market, there's a huge demand of woolen carpets. But they did not see the change coming in the way of through China. Chinese carpets became more popular. They were just saying, they were talking number of knots per square inch, 200 knots, 500 knots per square inch. So our woolen carpets are best in the world, and they were very costly. Those time running into lakhs of rupees, 72 lakh for a 5x7 carpet. In Indian market, they were saying there's no Indian market for us. People cannot buy carpet for 60 lakh or 70 lakh. So European is the market. Very successful. And they were our borrowers. But what they lacked, they did financial forecasting, but they did not foresee the future. What was the future? Competitors from other countries. They said, no one can beat our woolen carpets. Europe, huge demand. But suddenly, gradually, their demand receded. And where is woolen carpet export nowadays? You can just see. It is not at those days it was a huge scale from 1970s to early 2000. Today, that scale is very much reduced. Why? Lack of financial forecasting, lack of looking at your underestimating your competitors. Not only underestimating, they did not foresee their competitors. जैसे मैंने कहा कि शुतुरमुर्ग की तरह गर्दन हमने जमीन में लगा रखी है, ऊपर का हमें क्या पता, वो हमें नहीं मालूम कि where the competitors are coming. In absolute terms, no one can beat us, but nothing is absolute in this world. As I already said, Einstein theory of relativity says it. Nothing is absolute in this world. So we have to take care of our competitors. We have to innovate new products. And how we can innovate new products? Through forecasting process. And Chai Point is a very live example of financial forecasting from angle of managing the revenues, investments, and expansion very efficiently. Expansion means what? Surpassing the competitors. I cannot use the word beating the competitors. Beating is a wrong word. Surpassing the competitors. Because, sometimes competitors are also helpful to you. They are not our enemies. We take competitor does not mean enemies. They are our support. They are our guide also. In what's in their guide? We do financial forecasting. See what our competitors are doing. If they can do this, why can't we do this? Live example is my own bank, State Bank of India. You know, when I joined bank, it was like a Sarkari bank, government bank. Uh, we lacked infrastructure. We have got old styled counters wo jali lagi hoti thi counters mein. We didn't have proper premises, we didn't have proper sitting space for customers. But when other banks came, HDFC bank came, UTI bank came, now it is known as Axis Bank, ICICI bank came, we used to see them with, oh look, what is their infrastructure, we cannot beat them. So then we started thinking that they are not our competitors, they are guiding us. हमारे जैसे बन जाओ तो हमको भी बीट कर दोगे. So we also change our infrastructure. आज हमारा infrastructure, maybe I'm a little biased because I belong to State Bank of India, but you can also see that in terms of infrastructure, we are ahead of private sector banks. We've got huge infrastructure. We've got huge branch network, which is well connected. You know, in 2005, we were the first bank in India which went totally online. That is core banking. All our branches all over the world were interconnected. Oh, sorry, not the world, within India, interconnected. Despite the fact that we had got 12,000 branch network doses, today we've got more than 22,000 branches. And these banks, private sector banks, with a branch of 3,000, 4,000, they were not online connected. 100% they were not online connected. So what we learned from competitors, that learn it, they are guide, they are not enemies. Learn what they are doing. I still remember in 2007, one private sector bank said, we will surpass State Bank of India. And we were thinking how to cope with this challenge, because we were always number one bank. We are still. And this ICICI Bank said, we will surpass them. The chairman, Mr. Kamath, said, he said, we will surpass State Bank of India. For some time, we accepted it. Okay. Now, we cannot do anything, but we still keep on trying. And what happened? In subprime lending crisis in 2008, ICICI Bank also suffered. No, they are our friends. They are our colleagues. As I said, competitors are not enemies. They are our colleagues. In 2019, when Axis Bank was on the verge of collapse, the State Bank of India, HDFC Bank came to their rescue. They infused equity into that. Why I'm emphasizing this point? Learn from competitors. I'm again repeating, our competitors are not our enemies. They are our friends. We are working in the same industry and there are no enemies. We sit together, we learn from each other. That is why this world progresses. We work together, we go together. Anyway, I think I slightly deviated, but I was just trying to put forth my point that how this Chai Point used their financial forecasting process to surpass their competitors. Then financial ratios, we are all aware. I think time is also getting short, so I'm not dwell upon more into detail. I can one more point, that is machine learning, technology in financial forecasting. Machine learning, they use adaptive learning models. They recognize hidden patterns and anomalies. They use structured and unstructured data. And with this, you can say that what are the key machine learning techniques: predicting numeric outcomes, logistic regression, ML-based regression models, then time series forecasting models, predicting trends over a period of time, that is ARIMA plus ML hybrid models, Then long short-term memory networks, how HDFC Bank uses this LSTM model to predict ATM cash demand in different cities based on past transactions. How you find that in bank ATMs? Of course, there is cash shortage because nothing is perfect in this world. So sometimes our network also fails. If you go to your bank, your branch manager says network connectivity nahi aa rahi. But that is beyond anyone's uh, capacity. But mostly, they, every bank, including HDFC Bank, they predict ATM cash flow using LSTM model. What is this? Forecasting based upon past transactions. That is time series analysis, trend analysis. Then neural networks, deep learning for complex forecasting. TCS, they develop machine-based learning forecasting for businesses to predict quarterly earnings and market trends. So this AI-based, they have got huge machine learning in banking and finance. How can we use it? They are using it. Banks are using it. Credit risk assessment, NPA monitoring to reduce NPA, fraud detection, loan default prediction. Stock market algo trading, very famous nowadays. Algo trading. Of course, it is not for the small investors. It needs crores of rupees for investment. Then stock price prediction, portfolio management, retail and e-commerce, sales and demand forecasting, personalized pricing models, insurance claim prediction, fraud prevention, risk assessment. So these are some important points that we can use this machine learning in our financial forecasting model. For example, Amazon India, they are using ML-based forecasting model to predict customer demand and optimize inventory. So benefits, when we talk of benefits of this ML in forecasting: accuracy, real-time adaptability. It responds to market volatility and economic changes like algo trading in the stock market. It automates decision-making process. It reduces human efforts. So one point come that AI, it reduces human efforts. So people say that with the arrival of AI, this uh, uh, humans will be jobless. No, that is not true. With the arrival of AI, we will not be jobless. People will not be jobless. Only thing, their skill level will change. We will still get job, skill level will change. As I again give an example of bank. Previously we were operating on manual bank. वो मोटे मोटे लेजर हुआ करते थे सब वो हम लोग हर एक चीज रजिस्टर में मेंटेन करते थे. So in our bank, in my bank, State Bank of India, we started to automate the process, online connectivity. There was stiff resistance from staff members. So we will lose our job. अब हर एक चीज तो कंप्यूटर करेगा. ये जो डिब्बा दिखाई पड़ा, they were not accustomed in late 90s. कहते सब कंप्यूटर रखा हार्ड, ये जो डिब्बा रखा है सामने, ये हमको रिप्लेस करेगा. But we change management again. We train them. बोले साहब ये हमको तो सब पेन से कागज पे एंट्री करना आता, अब हमको आप माउस और कीबोर्ड दे रहे हो, हम नहीं चला पाएंगे. But what we told them, you see, you will be there, you are not going to lose any job. Only thing your skill level is change. पहले हम क्या चाहते थे, हम बैंक में वो स्टाफ लेते थे जिसकी हैंडराइटिंग बड़ी अच्छी होती. तब अच्छी हैंडराइटिंग में डेबिट क्रेडिट के अमाउंट लिखो, ऐसा ना हो कि 200 आपने 2 जीरो की जगह 3 जीरो हमको पढ़ने में आ गया तो फ्रॉड हो जाएगा. अब क्या हो गया, अब हमें उनकी जरूरत पड़ी जो कंप्यूटर में की कंप्यूटर की नॉलेज है, जो कीबोर्ड या माउस को ठीक ढंग से ऑपरेट कर सकते हैं इन वेरी सिंपल वे. दैट इज अगेन फोरकास्टिंग. So don't afraid, you will not lose your jobs. We will train you, and we spend a lot of money in training the people. They were 40, 50 years, 55 years old, our staff. They said, we have never seen computer. How you are going to train us? No, sir, do it. It is a process of change. You will teach your incoming generation, younger generation. Tell your daughters, tell your sons that how this computer operates. Try to surpass them. become their competitors in knowledge. And so they adopted it. So what was this change? Skill, only thing skill was changed. Skill level was changed. They were same. Our skill. So AI will not going to replace human beings. Only thing our skill level will change. That is more important. So machine learning, I can't see that is very useful for financial forecasting. And here, as I gave you one example, that HDFC Bank, they used ATM cash predictions. Even SBI, State Bank of India, it is using this AI for this ML models for NPA protection, NPA recognition. We analyze borrower's profile. Their, of course, CIBIL just gives their past track record. What will be their future trend? We are using that model, ML model, to assess that if we're going to give loan to this person, whether or this company, whether it will remain standard asset or after some time it become NPA. Again, this is again financial forecasting from banking. And what is more important for these financial decisions, which are AI driven, they should comply with regulatory norms, SEBI and RBI norms, Government of India norms, as well as ethical norms. Ethics is more important in any business, in any activity. We have to follow the ethics. And ethics, it is an unwritten concept in financial forecasting. Ethics, as I said earlier, follow the rules of the regulator, follow the law of the land. That is regulation. Then ethics, moral ethics. What we are doing, it is correct or it is not correct. That is ESG investing. What we are doing, it is good. ESG, what ESG? Environment. S for society, G for corporate governance. Even now, SEBI says they have made guidelines for mutual funds long back that they will invest only those companies which are ESG compliant. Means they are taking care of environment, they are taking care of society through their corporate social responsibility. As you are aware, every company has to donate 1% of their net profit every financial year for society, and then practice of corporate governance. All these things. So ethics is also a very important concept in financial forecast. That is moral value. You cannot write a formula for ethics. Ethics come from inside. Whatever I'm doing. That's why I said our competitors are not our enemies. If I'm treating my competitors as my enemies, it is violation of ethics. They're also human beings. Only thing they joined HDFC Bank, I joined State Bank. It doesn't mean we are enemies. No, we are friends. We learn from each other. That is ethics. So, what is the importance of machine learning? It improves financial forecasting accuracy. It helps businesses to make data-driven decisions. Algo trading, stock price prediction, detection of frauds, optimizing investment strategies. And despite challenges, it is shaping the future of finance everywhere, in our country also, with banks, stock. We are using this. It's for example, blockchain. So we are adopting this AI-driven forecasting models. And then data-driven decision-making, SWOT analysis, financial forecasting, decision trees, and big data and AI analytics. Since time is running short, I will have to summarize it very fast. Then another example is Zerodha financial. No, one of the big this in the area of investment, Zerodha. They've also opened their mutual fund unit known as Quine. They're also opened their educational arm known as Zerodha Varsity. Very, very successful, very useful. So they manage their cash flow and operating expenses as a bootstrapped company. They ensured long-term sustainability without external funding. Then revenue forecasting. predicting growth in online trading, there to forecast future trading activity. Retail investors, they started becoming associated with the Zerodha. Then they also studied, they did not violate any regulation for economic growth. So what is this? It is a traditional, it is shift from traditional brokers to online broking or discount brokers. And you can see from this data that their forecasted revenue and their actual revenue far ahead, far ahead. And as the year progresses from 2050, there was 80% growth. In 2023, 8 years later on, 152% growth. Why? Because of this forecasting. That is, I'm again emphasizing importance of forecasting. So now this was because time is running short. All these were success stories. But I also said that we learn from our failures. Everybody learns from failures. जब तक आप गिरेंगे नहीं, तब तक आपको चलने का क्या मजा है वो पता नहीं चलेगा. अगर कोई आदमी कभी नहीं गिरता है तो कहता है इट इज वेरी इजी टू वॉक. इसीलिए हम जब कहते हैं बच्चा छोटा होता है तो गिरता है, वी एनकरेज गेट अप. क्यों? द चाइल्ड लर्न्स. तो वी लर्न फ्रॉम आवर मिस्टेक्स और also we learn from others mistakes. If we do not learn from our mistake as a company, you are going to perish like Jet Airways. Other companies, other airlines, they took lessons, and Jet Airways is not the first airline that failed. Sahara was prior to this, and prior to this, one more company that failed, that is Kingfisher. So these companies, Sahara, Jet Airways, they did not learn lesson from them. It was limiting myself to Jet Airways. It was India's largest private airlines, market leader in aviation sector. They had got almost 40% market share about 10 years back. If I can show their market share, yes. In 2010, they had 23% market share. Indigo market share at that time was only 5%. By 2019, Jet Airways collapsed. Zero market share. Indigo market share, 5%. They went up in the span of 9 years. It went up to 48%. Wow. How? Financial forecasting and learning from their competitors. So what were their drawback? Jet Airways, poor financial forecasting, poor financial planning, excessive debt. लोन लिए जाओ. अब वो रिस्ट्रक्चरिंग के नाम पर एक प्रोसेस होती है कि अगर हमारा 50 करोड़ का लोन एनपीए हो गया तो 50 करोड़ और दे दो साहब, हम अपने बिजनेस को फिर से लाइन पे ले आएंगे. अरे हम दे तो दे 50 करोड़ और. व्हाट इज योर प्लान? एंड प्लान मीन्स व्हाट इज योर फोरकास्ट, और हाउ यू प्लान योरसेल्फ फाइनेंशियली. दैट्स मेनी कंपनीज जो फिर से गिर करके अपने पैरों पे खड़ी हुई हैं. दे आर डूइंग वेरी वेल. Mismanagement of cash flow. Result, Jet Airways collapsed in 2019. Excessive debt without proper financial forecasting. लोन लिए जाओ, सब लोन दिए जाओ. अब अगर हमारा पैसा डूबा है तो हम अपने पैसे की रिकवरी के लिए हमने आप पे ट्रस्ट किया, हमने आपको होल्ड ऑन किया, वो भी डूब गया. Because not the fault of the bank. We trusted you, but you belied our trust. You had no proper financial forecasting. What you showed us on paper, very beautiful, very solid financial forecast. But what was reality? Nowhere near your paperwork. Poor cash flow management, liquidity crisis. They were not able to pay salary even to their employees for months together, leave alone their operations for fuel for their aeroplanes. They, as I said, they did not adjust their financial plan to market conditions. They failed to estimate the market conditions. They started operating on loss-making sectors. Who told you to operate on loss-making sectors? Even when you are going on loss-making, you were expert in aviation industry. You do not know which are the profit-making sectors and which are loss-making sectors in terms of flying your aircrafts. That is over-expansion, going to loss-making sectors, over-expansion without any revenue model. Sustainable is afterwards. What is any revenue model? They didn't have a revenue model. Were just playing to become a glamour boy in aviation, glamorous person in the aviation industry. Nothing looks like glamorous. You have to be solid player. They were never. After some time. So, as I said, financial forecasting, it may not look glamorous. Even studying financial forecasting, it may not be very interesting. But what it leads to your success of the company. This again, financial mismanagement. Yeah, I'm using the word financial mismanagement. They always running into losses. Jet Airways. So what we learn, as I said, as a competitor, one should learn lessons. Even as stakeholder, banks were stakeholders in any company where we give loan to them. So always forecast, prioritize your cash flow and liquidity management. Adjust your financial planning or financial forecasting based on market trends. And dynamic financial forecasting is very necessary to adapt to the changing industry conditions. As I said, change management. Change management is an inbuilt part of your this financial forecasting process. That's why I said dynamic financial. It is not only on paper. We have to adapt to the changing industry environment. As I said, that SBI or any other bank, when we came from manual banking to online banking, when we started ATM in 1995, people say, who will go to these ATMs? We are more adept to going to the branch, sitting there, talking there, waiting for 30 or 40 minutes. And in the first 4 or 5 years, our footfalls in ATM was hardly 1 or 2 per month. And today, there are long queues in front of any ATMs. We have more than lakhs of ATMs in the country, which are connected through satellite. And then another lesson learned was focus on sustainable growth, not just expansion. Expansion is meaningless if there is no growth. Expanding too fast without financial stability can lead to failure. You are incurring losses and you are saying, we are opening more sectors. Whether you study those sectors were profit making or not, but you are expanding just to please the public. Look, Jet Airways, now they are also flying to those sectors where no aeroplane, no aircraft, no airlines was going. So what is the outcome? As I said, learn from your competitors. Indigo and SpiceJet learn from Jet Airways failure and build lean, cost-effective operations with better financial forecasting. Again, the importance of better financial forecasting. So there are some future trends in financial forecasting. There we are using technology, AI, data analytics for more accurate, real-time predictive financial decisions. It will be driven by automation, machine learning, real-time data processing, then predictive and prescriptive analytics, blockchain and smart contracts in in forecasting, then cloud-based financial forecasting tools, big data, financial forecasting, ESG, as I said, environment, social and governance, financial forecasting, that we have to always, that is ethics part. No, there's a difference between ethics and following the guidelines. Guidelines is what the rules say. Sometimes you follow the rules, but you violate the ethics. So these are two different things. Like AMFI had prescribed guidelines, ethics, code of ethics for all the players for all the stakeholders in mutual fund industry. For stockbrokers, there are code of ethics. For fund managers, there's a code of ethics. And in a nutshell, what is code of ethics? Never cheat. Never cheat your investors, never cheat your stakeholders, never tell a lie. Always treat your competitors as friends. not as enemies. There's a big difference between competitors and enemies. So blockchain real-time data will shape the future of financial forecasting. Cloud-based analytics will improve forecasting accuracy. So that was my presentation in a nutshell. And if anyone has got any query or you have got know something more about it, you can send your query to Abhijit sir or Sakshi ma'am, so that they will forward it to me and I will be able to reply to your queries through them.
Thank you
Thank
so
you
much,
so
sir.
much for giving a very patient hearing to me.
Thank you so much for such an insightful presentation and session that we had just now. I would like to request all the participants, if you have any queries, please come up with your queries so that sir can answer your queries. And if you want to discuss something, you can discuss it with sir.
Even if you do not able to raise queries right now, as I said earlier, you can give it to Abhijit sir or Sakshi ma'am. They will forward it to me and I will be able to reply to your queries in detail, because I understand that my timing slot was from 10:30 to 12. I did not overstep my timing, but there
No,
is some,
absolutely fine.
but I think less time for queries. So you can just send your query, because it is a long drawn process. It does not end with this 90-minute session. You can say it is just a beginning. So raise your queries, send it to me through them, and I hope I'll be able to reply to your queries.
Thank you, sir. Thank you so much. And before we end this morning session, we would request everyone to please open up your cameras so that we can have a group photo. And I would like to request Dr. Srivastava that if you could please stop the sharing so that we can. Yes, thank you, sir. So we request every participant to please open up your cameras so that we can have a group photo.
I would request participants to please check the chat box. Feedback link is already given there. And now we have a next session in the afternoon, that is from 2:30 onwards, followed by the valedictory program. So stay connected with us. Thank you, Raj sir, for the wonderful session. It was really interesting and good to know how the failure gives us example to get some more learning to step ahead in the business or in the market. Thank you, sir.
Okay, thank you
Thank
so
you so much.
much.
Thank you, sir. And thank you so much to all the participants. And we request you to be present at our second session at 2:30 p.m.
Okay, sir.